Thank you for joining me for the Tax Saving Minute. Season 2, the new tax law. How will the Tax Cuts and Jobs Act impact your taxes this year? Today, we're going to talk about how have itemized deductions changed. The standard deduction has doubled, so fewer people will probably be taking itemized deductions. But what can you deduct and what can you not deduct? Well, on the list of things you can't deduct is unreimbursed employee expenses. So all that driving you've been doing for work and not getting reimbursed for, but faithfully keeping track of your mileage, will not be deductible anymore. Also, brokerage investment fees and IRA custodial fees. Sometimes these are a lot and they're not deductible anymore. Safe deposit box fees, casualty and theft losses, unless you're in a federally declared disaster, such as a flood or hurricane or tornado or fire. If it has been federally declared a disaster area and you're in that specific area, usually it's by county, then you can deduct those losses. And finally, tax prep fees. Sadly, you cannot deduct tax prep fees unless you have your own business. And then many things suddenly become deductible. But that is something we can talk about in another episode. So what can you still deduct? Well, you can deduct medical expenses all the time, medical expenses. You can deduct state and local taxes, real estate taxes, up to $10,000, but no more. You can deduct mortgage interest up to a loan of $750,000. And you can deduct charity. If you want to give a lot of charity, you can deduct up to 60% of your income instead of 50% like it was before. So how will this affect you? Did you pay a lot in real estate taxes before? Did you have a lot of unreimbursed employee expenses? Then you might not have as many itemized deductions this year. And you might think, oh, phew, I don't have to keep track of any of those records. Well, you might end up itemizing anyway, or you could have. So how does this affect you? Do you usually pay over $10,000 in real estate tax? Do you usually have a whole lot of unreimbursed employee expenses? Your itemized deductions may be less this year. But don't assume that you're not going to itemize. You don't know that. You might have had a lot of medical expenses, or you may have given a lot in charity. So keep track of those expenses and don't assume. How did the tax rates change this year? Well, join us in episode 4 to find out. Thank you for joining me for the Tax Saving Minute. If you have something burning on your heart that you want us to talk about, mention it in the comments or go to taxmantom.com. I'm Cynthia Umstadt, CPA. See you next time.